Budget 2023 for real estate. What's positive, what's not? Welcome to the Property Show with a spotlight on the Union Budget. We simplify this annual blueprint for the Indian economy with some key questions. Does this budget support India's housing demand revival? And is it good, bad or not so pretty for other sectors of real estate, be it retail or commercial? Now, before I go to my discussion, here are some of the direct announcements which made an impact on real estate. Now, the budget has increased the allocation for PM Awas Yojana by 66% to over 79,000 crore rupees. That's a whopping big number. There's also been a 40% or higher tax on payment of interest or debt to sponsors by real estate investment trusts or REITs. Now, remember, this is a very recent investment option for retail investors on the Indian stock market. So this is not that great a news. Capping of capital gains exemption on sale of residential property, equity, ESOPs under Section 54 and 54F. The amount is 10 crore rupees. Now, that's a very big change for luxury housing market. To understand how each of these will play out for different segments of real estate, I'm joined by Sangeeta Prasad, Group CEO, Runwal, Anshuman Magazine, Chairman and CEO, CBRE India, Southeast Asia, Middle East and Africa. Also with us, Monu Ratra, Executive Director and CEO of IIFL Home Finance, and Gaurav Karnik, Real Estate Leader and Tax Partner, EY India. A very warm welcome to all of you, and let's dive in straight away. Anshuman Magazine, what aspects, announcements stood out for you in the Union Budget? Because really the top three announcements were fairly sketchy, not bad at all, at least the top one on PMAY.
Kind of stretching to find out, but if you look at the capital investment outlay, that will lead to a lot of job creation, and job creation really creates demand. So that's one I would give a lot of marks to. The other one is, of course, what you mentioned about the affordable housing, 66% leading to 79,000 crores. And the other very interesting thing I found in the budget was about the whole thing of, the tax. I'm hoping that some of the disposable income can be reinvested into more fruitful areas like real estate. I would have liked to see something better in the tax rationalization. So that's about how I see the direct and indirect impact of real estate in the budget on the real estate sector.
Okay. Gaurav, your first reaction. I mean, from a tax perspective, of course, there's much to discuss, but because Sangeeta started the conversation on all the other things which will keep the economy and jobs going, is that what you also feel was a big positive for the sector as a whole?
Yeah, so I think on an overall basis, if you look at the budget, it was good. There were no new surprises except the one on the REIT. But other than that, it's been a good budget. It has a allocation for affordable housing in the PMAY. It has stuck to the fiscal deficit target, so that has made sure that the bond markets don't have any adverse reactions. We've kept away from giving too many SOPs and making it difficult to justify in an election year. So I think they've stuck to the course. I think we're on kept pretty stable rates, pretty stable provisions. So I think that's a good thing from an overall perspective.
Okay. And I think fiscal prudence is what everybody is delighted about, that, there's no terrible opening of the purses. But of course, there's also that huge amount which has come, 10 lakh crores for just capital investments, which is likely to be an accelerator. Monu Ratra, noticeable announcements which you believe will keep demand for homes in cities robust? Because, we've had a fantastic 2022. All housing finance companies have done phenomenally well, including banks on their home loan books. But, inflation is still a little bit tricky, isn't it? It's come down, but we can't really rule out more hikes.
Yeah, thank you, Manisha, for having me on the show. I totally agree with you. We've seen some reasonable rate hikes in the last about 6 to 9 months. But surprisingly, we are an affordable housing finance company, and we haven't seen any real slowness in the demand for affordable housing. And I think this PMAY enhancement of subsidy to 79,000 crores is very, very substantial. This subsidy is actually the one which goes to the self-construction homes in the tier 3, tier 4 towns. So it's a very targeting the housing for the masses. I think that's a very, very big positive for them. And the entire story of housing for all can really pan out across the globe, or across the length and the breadth of the market. Also, I think if you see with the capex and the enhancement of the infrastructure, is a very direct correlation with real estate overall. It leads to employment to people. It leads to more money in the hands of the people across the length and breadth of the country, which in turn enables for people to own homes. So I think although you're saying that yes, inflation is still not at a comfortable levels, but for us, we haven't seen any slowdown in demand so far, in spite of the rate hike as well.
I mean, I can see a big smile on your face. Look at the allocation to PMAY, and for anybody who's in the affordable home finance segment, that's just more positive news coming their way. Anshuman, we couldn't hear you, so come in here. What grabbed your attention? I mean, everyone's cheering the huge capital expenditure allocation, almost assured that, we've got a 7% GDP growth number also from the finance minister. So, hey, look, the economy is going to do well and jobs are going to do well and therefore housing will do well.
I agree mostly. I think this is one of the first budgets, and I've been doing budgets more than 20 years, which touched almost everything which is relevant currently for our Indian economy. Green buildings, green environment. So, that is a current topic, to robotics, manufacturing, infrastructure, of course, tourism, airports, agriculture, I can go on. So they really touched every aspect of the economy, and especially every aspect of the economy which is just currently relevant. So from that point of view, it was a great budget. You mentioned PMAY scheme. My only I want to mention on PMAY scheme is it's a fantastic allocation of funds. Government of India had a target of 2 crores low-cost housing by 2022. Out of that, almost 70 lakhs, I think 68 lakhs to be precise, have been fully constructed, but sanction for more than 1 crore low-cost housing has been done. So they've extended that scheme, which is good, and they have added 66%, they increased the outlay by 66%. Okay. That is fantastic. But the only challenge is that this is not affordable, this is low-cost housing. There were no
it's not the developer. It's not the developer affordable. It's really low cost housing, which is different. Absolutely, but it's still an accelerator. There's steel demand, there's cement demand, and there's so many ancillary industries which continue to do well as homes get built, whether it's in rural India, and that whole housing for all.
Like I mentioned, it's a fantastic allocation. It'll have a huge multiplier impact. However, if you look at the urban housing side, all the requests or the demand for giving some tax incentives, increasing the interest rate because mortgage rates are going up, all of that was ignored. So this PMAY scheme has already made an impact. With this outlay and with the previous funds being allocated, it will have a major positive impact, no doubt. But I wish there was something more on the urban housing. But like it was, I think, mentioned, which I didn't hear before, is that the real estate market will benefit from the allocations to tourism, revamping of 50 airports, just on the infrastructure side, all the allocation is we made. Manufacturing, because we think of real estate as only housing in most cases. The manufacturing itself will make a big improvement in industrial real estate, be it logistics, be it health. There will be a lot of industry activity. So from that point of view, a great budget. But certainly the other aspect maybe we'll discuss later on the urban housing side, everything was ignored.
I mean, I agree that anybody who's done the pre-budget show or written about it, there was a long list of demands from the industry, and I don't think a single one has made it to the FM speech or that document. Let me come to REITs. Gaurav, the budget has proposed an amendment by which now the distribution by a REIT, whether it's as an interest or amortization of repayment of debt to unit holders, has been brought under the ambit of taxation. Now, my question is, this is definitely going to reduce, and I've spoken to REIT managers, and they said that expect now at least a dampener by 1% on REIT yields. A new investment vehicle, not more than 3.5 years old, was this needed?
So frankly speaking, it was not needed. I think the REITs is a great product, and it was just picking up steam in the market, whether it's the REIT product or the InvIT. So this amortization of debt getting taxable in the hands of unit holders is not just relevant for REITs, but is also for the InvITs. And given the nascency of this market, and the government was encouraging, taken a lot of encouraging measures to promote this product. And just as the market was getting used to this product, we've had a change in the tax laws, which is not really beneficial because this tax could definitely impact the returns, maybe 1%, maybe higher, depending on the taxable status of the person who's receiving this money. So I think, frankly, this was not required, and there could be a better way of trying to get this taxable.
Anshuman, what's your take on it? I mean, you look at the amount of money which has come in from foreign institutional investors into REIT, into office assets, which have then been turned into REIT portfolios, REITable portfolios. What signal does this send out, or do you believe that it was, it was really not to be exempted? There was a large part of REIT income which, because it was accounted for as interest and debt repayment, was escaping the tax net. What's your view?
No, my view is clear that this was not required. Especially this year, we're expecting at least a couple of more REIT. And the REIT structure has made a huge contribution, especially the commercial real estate side of the market, bigger than people realize. A lot of the investment which is coming in, one of the big reason is because of REIT, which means that it provides exit. Because any big funding coming in, the first thing they look at, okay, the return, but how can they exit? REIT provides that exit. And I thought this is completely unnecessary because REIT is, and the REIT structures are professionalizing it, making it more transparent, letting the retail investor participate in the real estate market in a transparent manner. So I really feel that this was not required. It was just unnecessary.
And as is, post-COVID, offices have not got filled up again. There is hybrid work challenges which office assets or office buildings have to deal with. Literally, if you look at all the three large listed REITs, their prices have tanked, not done that well from their listing price to now, and the yields have already got depressed in a rising interest environment rate. So, for a new product, I think this is a big setback. We still have to discuss Section 54 and 54 tax break, which if in case you had a big capital gain on a sale of a residential home, or even of your equity stake as a founder, or even ESOPs that were handed over to you as a professional, you could actually reinvest the entire amount in other homes and save all your capital gains. Now that has been plugged. How much will that impact luxury homes? That's what we will come back and discuss on the other side of this break. So stay with us. You're watching the Union Budget 2023 analysis from the perspective of housing and real estate. We're going to come to now Section 54 and 54F tax break, which has now been limited in terms of capital gains that you make and what you can invest in buying a residential home and save all of those capital gains to a number of 10 crore rupees. Now, Sangeeta Prasad, I'm going to come to you. Now, Mumbai is a market where 10 crore is actually not a large number, right? How big a dampener will this be for luxury home sales?
I'm seeing it that more people, end users, should first purchase rather than go about arbitraging on tax. So I see it as a positive. And if you look at the plus 10 crore market in Mumbai as well, the numbers are not that large. It is not impacting in terms of the volume of transactions which happen in the market. So it's a wait and watch. Let's see whatever we Mumbaikars launch, are people buying it first end and for end use? That's how I see the impact.
I did read that Vikas Oberoi said that in the overall Oberoi, projects, I think capital gains adjustment was probably 1% of home buyers. So,
Exactly.
Gaurav, would you believe that, agree with Sangeeta that it's probably a secondary market issue? You sell 100 crore home, then you go and buy 3 homes of 30 crores each, or, it could actually impact some amount of primary home sales as well, especially looking at the fact that developers have just started getting gung-ho about luxury projects again.
So I think this impact of this provision will definitely be on recycling of high-value residential homes. I think the secondary purchase market will be impacted more than the primary market because this is normally a tax planning used to use when you sell off, a first house, etc. So my belief, it is more a hit on the secondary market than on the primary market. I think primary market is on the upswing, and I think the demand will continue on that side. I think this was more, this planning was being used by others to buy 3 large houses, etc. So I think in a way they've tried to cut down on that practice.
Okay. All right. So this is what happened in this year's budget. But what did we miss out? I know, Anshuman, you were dying to talk about that, and there was a lot which was missed out. But let's start with Monu. Mr. Ratra, 2 lakhs to 5 lakhs exemption limit on both interest and principal that you get on a home loan. That's been every year that I've been doing a budget show. That's just been right up front on the table. And this time you've had interest rates going up from 6.75% to over 9%. This should have happened. It was still missed out. You don't think another, 0.25% jump in home loan interest rates and you will see some amount of slowdown?
Yeah, Manisha, you have to, I think, divide the Indian real estate market into 2 clear divides. Like Anshuman mentioned, that this budget is more for the affordable, a bit below affordable housing. So it seems that the government is very focused on the masses, the homes, because still about 95% of the demand in India is for EWS LIG housing. That's the gap. And I think they just focused on that. And they believe that we need to spread it slightly more. And I think little bit changes which they brought about in the tax slabs up to 7 lakhs and others tidbits have been there to do that. But I think it has to be justified that if you want to spread this to far and wide housing in this country, then you need to somewhere you take out from somewhere and put somewhere. So although we might want people on this channel, but I think there's another India which is devoid and deprived, which had to be taken care of. So I think it's a fair arbitrage, if I may say so. Mm-hmm. But I think that's the approach which this government has had to make it more granular and spread it where it matters the most.
And I would agree with you. I would agree with you that, at least CLS is giving, that developer affordable segment also 12 to 18 lakhs, some amount of subsidy. It continues. And really, it's below that it needed to have traveled down. And with that income tax slab, minimum slab going up to 7 lakhs, no tax on income up to 7 lakhs, I think that has been taken care of. Very quickly, Anshuman, what was missed out? I know that on the commercial front, a lot of people are disappointed. There's no clarity on SEZ, but it can be done post-budget as well, isn't it? Anything else that you feel should have made it to the budget but was a big miss?
So first of all, this capital gains you mentioned, I think it was completely unnecessary because if it is only impacting a small amount of people, then how much tax are you going to collect? Second is, I don't agree that, one should substitute the other. So no doubt, the low-cost housing is extremely important. No doubt that was a fantastic move by the government to increase in PMAY scheme. But that should not be at a cost saying, okay, we've done that. The urban housing does not matter. The fact is the entire housing would have a multiplier impact on the economy. So giving those, and with, like you rightly said, the interest rates have been going up. The value of properties are going up. So any encouragement to housing only helps the economy. And there should have been all those, as you said, the long list of giving tax exemptions on going from 1.5 to 4 or 5 lakh rupees, scale on giving tax incentive on housing, even rental housing, should be encouraged even more. So none of that was done. So it was, that way these areas were disappointing. But I must, like I mentioned earlier, the big positive is that all the investment in the infrastructure side, including we missed out besides all the huge allocations in the infrastructure fund, the urban infrastructure fund, which has got 10,000 crores, focus on tier 2, tier 3 cities. And besides, like I mentioned, airport, tourism, all this put together will have a positive impact on the real estate market, no doubt. But certainly, there was, I don't think government would have lost on anything by giving some more, incentives to especially the affordable housing. Because I think what is not understood is there is a difference between affordable and low cost. So while low cost should be and is a must focus, but it should not be at the cost of urban housing. And that's what, I don't agree when you say, okay, that was the focus, that's what you need to do. Absolutely, but why ignore the rest?
All right, point taken that something for urban housing and affordable urban housing could have come in, especially as simple as, taking up the tax exemption limits on home loans from 2 lakh annually to 5 lakh rupees. I think that would have offset some amount of EMI impact that, middle class families are right now seeing. Well, we're going to wrap out the discussion. Monu Ratra and, of course, Gaurav Karnik, Sangeeta Prasad, Anshuman Magazine, thank you very much for making the time for it. And all that I can say is that, fingers crossed on the growth numbers. It was a confident finance minister who said that, look, Indian economy will grow at 7%. And with all the infrastructure capex that has been planned out, both for urban infrastructure and capital expenditure, I think, jobs, economy and housing demand should play out as expected. Goodbye and thanks so much for watching.